Hi guys, it's Any aka the Not Trader, your friendly neighborhood swing trader, back again with another video. And in this video I'm going to be talking about double tops, double bottoms, triple tops, triple bottoms, all four of those in this video. Another chart pattern video. Let's get straight to it. Before I get into this video, please like and subscribe to the channel. Hit the like and subscribe button. You know where it is. And I've got Facebook, Twitter and Instagram at the Not Trader on all social media platforms. In the description section below, I have a link to my mailing list. If you want to join my mailing list, you get early priority access to my training course that I'm developing straight to your email when you get it. You also get alerts of when my videos are coming out before anyone else. And I'll keep you updated on my trading watch list as to what stocks I'm in right now, what I'm trading. Yeah, so that's it. And yeah, let's get into the video. So this is going to be a short one. This one's about, I haven't done the trading chart pattern video in a while. And I try and do them when I see them in live action because I don't want to just give you theory. I want to show you the practical as well. But today I'm going to be talking about double tops, double bottoms, and triple tops, triple bottoms. Right now here I've only got triple tops and triple bottoms on the chart because double tops and double bottoms basically experience the same behavior. So there's no point. I thought there's no point me going over the same thing of just to make the video longer than it needs to be. So triple top on the right hand side, what it does is that it will come down, test a resistance, but at this point you wouldn't know it's a resistance because this stuff doesn't exist. So it'll go like this, come up, come back down, and then it'll find the bottom, it'll find the top, and the top will be where it broke here before. So it'll hit the support again, hit a resistance. Now if this is a double bottom, it'll come out, come back down, and come up again. But if it's triple, it'll come back down, come up, and then once it breaks the resistance, what I do is that I would let it break the resistance and then come back down. And at this point is where you want to enter, because then it's confirmed that it's made new highs and it's ready to carry on going. It might break it and come back down again, and that might just be a false flag. So you want it to break it, come back down, and hit the old resistance as a new support. And at that point you can enter a long trade and set your stop loss just under this line here. So I'll make that red. So set your stop loss just under here, so that if it hits it, then it's a small loss. But and it's a great position to be in because then the risk to reward will be pretty good because it can go on for quite a bit. What you normally tend to see is that whatever the distance is between the support and the resistance, that's where you want to take profit. That's the rule of thumb. But really, what I would do is that as it carries on making new highs and retracing, I'll just raise my stop loss every time it retraces and then starts climbing again to wherever it retraced to. So for example, oh, what have I done? No, I wasn't meant to do that. And what I'll do is that as price keeps going up, I would raise the stop loss to just below here, so that if it ever decides it wants to change direction, I see if you at least you're in a profit territory, as I like to call it. So that's where your stop loss is above your entry point. So you're making profit regardless. It just depends on how much you're gonna make. And it's kind of the same thing for double top. So you just do the same in reverse really. It'll hit the resistance, hit the support, hit the resistance, hit the support. And if it's a double, it will go down. If it's a triple, it will come down. If it's double, it'll go down, hit the support as a new resistance, and then carry going down. And so if it's a triple, it'll do the same thing, but it'll have three here. Now, what I like to tell you is that when you see in a lot of technical analysis books or theory books, it'll give you like a pretty clean, like all three will be in line, and for the most part they kind of should be, but you find that some triple bottoms or double bottoms may not be exactly in line, so you can't discount them if they're not exactly parallel. You just have to, it takes a while to realize. It's something that you just have to see enough times and then you'll realize when there is one, because a lot of times, especially with triple bottoms and triple tops, you'll find that all three are not going to be exactly in line. But I'll show you in the next section right now, rather than just explain it to you. So on this chart here, there's a lot going on here. On this chart here, straight away you can see I identified the double bottom here, and for the most part they're parallel. So and so it came down, came up, came down, came up. And the good thing about this one is it's quite different, because you see there's a double bottom within a descending channel pattern. So what I was waiting for was it to break the ascending channel pattern, hit the ascending channel pattern as a new support, and then climb. So I would have entered around here. So if you go down to like a 2-hour chart or something, it's a little bit neater. So as you can see, it's not exactly parallel, but it's enough that I consider it a double bottom. So you have to realize this, that it's not going to look as neat and as clean as you see in textbooks. And that's the reason why with all my chart pattern analysis that I show you real life use cases, because you'll be looking for something that doesn't exist if you want to see it the way it is in the textbooks. You need to realize that the markets are kind of crazy and volatile, so everything looks a bit messier than it does in a textbook. So I identified this double bottom. I gave it a little bit of a room for I don't even know what to call this, but it didn't hit it completely, but I still consider it a double bottom. I waited for it to come up, came back down, and then broke up. And what you realize in this was that when you start being able to identify patterns, several patterns can be displayed within the same chart, and then once you know what each pattern means, you can use them to your benefit to dictate where you think a price action is going. So the way I analyzed this, I thought it's a descending channel pattern that looks like it wants to break out. When it broke out, I used the line as the descending channel pattern resistance as the support. But and there's another one I wanted to show you quickly. So that's Juniper, and it was J Blue. That was it. So this one on the daily chart, I'm going to consider this a triple bottom. Some of you may argue with me. Argue me in the comment section below if you think it's not. Some might call it head and shoulders. I don't think it's head and shoulders. I think it's a triple bottom. It just broke out because it was trying to stay true to the descending channel pattern line. But I'll still consider this as a triple bottom, because once it was going up and coming down here, it stayed true to the ascending channel pattern, came up, came down, and then where it decided to level off was where it was a previous support line in the descending channel pattern. So I consider this a triple bottom where it just broke out a little bit. Personally, what I expect this to do is what the other chart that I just showed you did. I expect this to break out and then hit the support as a resistance, and then that would be the point to enter, and I'd set my stop loss just below there, and hopefully it'll climb up some more. Yeah, so that's oh yeah, so that's my video on sorry, someone came in the room. So yeah, so that's my video on double bottoms, triple bottoms, double tops, triple tops. Not trader signing out.